Hello traders and welcome back to the Forex Geek, where we dive deep into the tools that can help you make smarter trading decisions in the market. So in today's video we are going to be talking about the Keltner Channel Breakout Strategy, which is a powerful method to identify breakout opportunities and capture significant price movements in the market. So if you've ever struggled with spotting reliable entry points or understanding when a breakout is likely to occur, this strategy could be exactly what you need. So stay with me until the end of this video as I will walk you through not only how the Keltner channel works, but also a step-by-step trading plan you can use to start trading and immediately improve your results. So first of all, I'll explain the Keltner channel without wasting much of your time. Let's get started. The Keltner channel is a technical indicator. You can see it on your charts. And this indicator is designed to measure market volatility and identify potential trends. It consists of three key components: a middle line, which is typically 20 period exponential moving average. Then we have two outer bands calculated using the average true range. This average true range, you can set it 10, and also change your you can also use the bands of average true range, which is what we are talking about. Not don't use the true range or range. Set your length to 20 and set your multiplier to 2. This is how to set your Keltner channel. So what sets the Keltner channel apart from other indicators like the Bollinger Bands is its reliance on ATR instead of standard deviation. This makes it more responsive to true price volatility rather than statistical deviations. Also, the width of the channel adjusts dynamically based on market conditions, expanding during high volatility. You can see it expanding during high volatility market. You can see this happening right here, and also contracting when volatility is low. You have the contraction happening around here, expansion happening here. So it expands and it contracts. See this contraction, low volatility. See happening here. High volatility like this, you have expansions happening. And that is that for the expansions and the contractions of the Keltner channel. Also, the slope of the middle line plays a crucial role in trend identification. For example, in an uptrend, for an uptrend, a rising middle line with price hugging the upper trend. This is how it's going to look like. If you're experiencing an uptrend, you have a rising middle line, and in a downtrend, you have a falling middle line with price near the lower band. Now you can see this happening here. This was just a minor pullback. This happening right here was a minor pullback, and price was just towards the lower band, and the middle line was sloping to the downside. And if it's a sideways market, what are you expecting? You should expect a flat middle line where prices oscillate between the upper and lower bands. Look for that example of a ranging market. Okay, we have, I think I saw one around here. We have this ranging market here where price was just oscillating between the upper, the lower, the upper, the lower, and this is a ranging market. We have the flat middle line. We aren't exactly going up, neither are we going down, and the middle line is just there. So this is for ranging markets. Now this is how to read your Keltner channel. Also, the Keltner channel can signal overbought or oversold conditions. When prices touches or exceed the upper line, like you have here, price exceeding the upper line or the lower line can indicate overbought or oversold levels. Also, you have when price touches or breaks below the lower band suggests oversold conditions. It should either touch it or break below it. If it breaks below it, it signals oversold. Breaks above it, overbought. We have this happening right here. We have oversold levels. Here, the Keltner channel was just telling us that this market has been overbought and we should be considering selling, or we should be preparing for a correction or a pullback in the near future. And you also have that happening right here, signaling overbought conditions. So it's very crucial you follow and understand what the Keltner channel does before we hop onto the strategy which we are going to talk about. So I believe with all of this I've explained, we now have a basic understanding of how the Keltner channel works. And now it's basically a technical indicator. It does so many things at the same time. So the first step for our strategy, we are talking about the Keltner channel breakout trading strategy. The first step is to set up your chart, apply the Keltner channel indicator, and this should be your setting. Your length should be 20, your multiplier should be 2. Remember, the length here is the length of the middle band, which is the exponential moving average. We are using a 20 period exponential moving average. Your multiplier should be 2, and your average true range should be at 10. Also here, band style should be average true range. And this strategy works best on higher time frames like the 1 hour, the 4 hour, and even the daily charts. Adding a volume indicator can help confirm breakout strength. So just quickly add a volume indicator to help us confirm breakout strengths. Alright, the next step is to identify market conditions. Are we bullish? Are we bearish? Are we too volatile? Or are we ranging? Look for periods of low volatility when the Keltner channel bands contract. These narrow channels often indicate that the market is consolidating and preparing for a breakout. Now, where can we see? Remember, we talked about consolidation and range in markets, low volatility. We have one happening here. I marked this out where we are ranging. And let me look for another one. We have another ranging market going on right here. And we also have another ranging market going on here. Just basically market ranging markets based on the Keltner channel. And you have a ranging market. Actually, this is like a trend, like a ranging trend actually. Price just ranging while moving all the way up. Okay, I will select that. I have another ranging happening here. The price is oscillating between the upper band and the lower bands. That's how you know ranging markets. Giving us this move between upper bands, and we have a long one here. Upper bands, lower bands, upper bands, lower bands, without consistently touching one particular band and moving all the way down or all the way up. We have this is a bullish trend. As you can see, this is a bullish trend happening right here. And there is no ranging. We don't have up down movements from the top band to the bottom band to the top band to the lower band. No, we have consistently touching the upper band, and that is a bullish trend. So we've identified the market condition. We can see this sideways markets where the line is basically horizontal. Now the next step is to spot breakout signals. This is very important. Pay close attention. A breakout occurs when price closes decisively outside the Keltner channel. And this for bullish breakout, it occurs when price closes above the upper band, and for bearish breakout, price closes below the lower band. And you should confirm the breakout with increased trading volume, as this indicates stronger momentum behind the move. Now let's go back to all our ranging markets and watch out for price closing decisively below the band. We have one happening right here. If you look at this closely, you can see that close. This is very important. You can see the close below. Actually, we have the first candle closing below the Keltner channel, and we have the second bearish candle closing below the Keltner channel. All of this happening within a space of just 8 hours. Actually, it's a 4-hour time frame. And once we've spotted this, it's the next step is to just enter the trade. For a bearish breakout, you just enter a short position when price pulls back to the outside of the lower band. Wait for this pullback, reduces your risk of entering on false breakouts, and improves your risk to reward ratio. So after you have this, the next is to wait for a pullback, then market structure shift again. If you are an aggressive trader, you may just want to enter at the close below the Keltner channel, but to avoid false signals, and if you're a conservative trader, you wait for this confirmation additional breakout, and also use your volume to confirm. We have increasing volume as we broke out of the channel right here. This red volume here had increasing volume at the time. At the same time, we had this break below the Keltner channel. So we're just looking to take our sell trade right there. Stop loss, stop losses here should be placed above that swing high where we had our pullback, or you could just place your stop loss above the middle line. Above the middle line, the middle line is 20 period EMA, and for long periods, for long positions, you could place it below the middle line. You can also place it above this swing highs and swing lows if there are any close by. Then you could just trade until you have a fixed risk reward ratio, or you just follow the trend while looking to target previous support levels or resistance levels. You just trade it all the way down. You have lots of levels which we can target right here, and that's how I would have been able to take this short trade it all the way down using the Keltner Channel Breakout Strategy. Is very straightforward. You should first of all spot areas where price is consolidating, then look for a breakout actually out of the Keltner channel and a close. You should wait for price to close. Also confirm with your volume, see increasing selling volume. At the same time, we had that breakout. Now the next step is to wait for this pullback happen. See the pullback happen here, then a confirmation to the downside. Now after we had our pullback, wait for price to give us a close to move below this, give us a change of character or market structure shift, whichever one, and we enter here with our stop losses above the channel or above this high, and our take profits all the way down 1:2, 1:3, depending on your test. I like to stick to 1:2. 1:2 is more favorable, and you just get your target hit in minutes or shorter time. And looking forward to more examples, we have this happening right here. This is actually, see this one here, this was for a bullish trade example, and you can see this ranging market with the price moving up down the ladder before we had a decisive break. Remember, this should be decisive enough, a decisive break above or below the channel. Now if you look closely, you have a break here. We have this break happening here below the channel, but it is not decisive enough. How do we know decisive breaks? You can see we don't have volume corresponding at the same time with this break. There's no corresponding volume with this breakout, but we had another breakout happening here, which I'm just going to circle. Have price closing above the channel. Also have another major close here if you're looking for a decisive one, and you can see increasing volume. You can see the volume corresponding to this breakout, and that's where we can look to take our buy entries. On the lower time frames, this is a major market structure shift. Also, this is another major market structure shift. It's just the price was too volatile at the same time. It's another market structure, so we could just look to enter. Either we enter here or we enter here, whichever one. I'll choose the first one, and stop loss below the middle line, the EMA, remember, and take profits all the way 1:2, 1:3, risk to reward ratio. I will just ride this trend all the way up. Now this is how you can use the Keltner channel to trade. It's very easy, it's very simple. I'll need you to practice it for me before you hop on the charts. So we have another example happening right here, and we have our close above the channel, where remember all of these here are not close. It didn't close above the channel. We have the close happening here. At the same time, we have our volume supporting that close. So what is left to look out for? We have to look out for a change of character, a pullback, and a change of character. We have our pullback happening here, and see this trend line pullback, and then we have a change of character to the upside. After spotting the price moving above the Keltner channel, it is not advisable to just place your entries. No, you should wait for this additional price action before you place your entries. Indicators just tell us what the market wants to do, not exactly what it is going to do by force or obligated to do. No, price action also tells its own story. Are we having a pullback? Are we having a continuation? Are we having a, you know? So you should always rely on price action at the end of the day. Don't just rely solely on indicators. Because we have a break above the Keltner channel upper band, so we should just place a buy. No, we should also wait for confirmations from probably other indicators, or should wait for confirmations from um our indicator or our price action. You understand? Wait for further confirmations before you place your entries. Now we have this confirmation from price action. You see the market structure shift we had right here, and also price breaking above this trend line we had here, had the retest. Oh, this is too perfect. We have the retest happening and a prominent buy from that area for a 1:2 risk to reward ratio. You could just set your break even once price crosses above this previous resistance line. We have price signaling overbought conditions here, so we're looking to close our entries. It's very simple. It's very simple. I would advise you practice, backtest, focus on trading during high volatility sessions like London or New York opens, as breakouts are more likely to succeed during these times. Combine the strategy with other indicators like the RSI or MACD for additional confirmation. Avoid trading around major news events to reduce risk associated with sudden price spikes or false breakouts. Alright traders, you've come to the end of today's video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, do not forget to like. Do not forget to like, subscribe, and turn on the notification bell so you never miss out on more trading tips and strategies. Thanks for watching, and I'll see you in the next video.